On a previous video, a value of $1, I went off on a tangent on how my parents, they pay a financial advisor to manage their retirement accounts. And the financial advisor is part of Fidelity Wealth Management Services, but they charge a fee based on assets under management, and they pay over $10,000 a year on this service. And I tried them out for a little bit, and then after reading Jack or John Bogle's little book of common sense investing, I eventually made the decision to move away from them. But occasionally I'll ask my parents, like, how are those fees treating you? Because every quarter they have to pay at least $2,500 in fees. And this is just the advisory layer of fees. There's another layer under it for these actively managed funds that attempt to beat the market. And I bring it up to them occasionally. And I think last week they said, well, so like, what do you recommend if we're to get away from this financial kind of management stuff? And I introduced them to the world of extremely boring index funds, which is based on Jack Bogle's book, Little Book of Common Sense Investing, which basically talks about lazy portfolios. That's where you buy the whole entire haystack and you hold. And it's based on the premise that over 80% of the people that try to beat the market fail to do so. So you're essentially paying someone a premium to try to beat the market, and in reality, most cannot. So the methodology is just to join the masses and run those averages. And on the most simple terms, you have a basket of very boring US stocks, and there's various index funds for that, and a very boring basket of US bonds. And if you want to make your life a little bit more complicated, you can introduce a third basket of very boring international funds. And the main dilemma is, do you choose for the US stocks, do you choose the total US stock market index, or do you just go for the top 500 companies? And essentially you're trying to choose between, do I want to go with a yellow wall or an orange wall? Or am I going, or do I want to choose between a pink wall and a purple wall? They kind of look similar. They look the same way, but they're slightly different. And I just referred them over to my brother, because my brother knows about investing to a better degree than I, because he actually has a degree in, I think, finance or economics or something like that. But he knows more about it than I do. But I'm kind of glad that they can they're interested in making a move of saving at least $10,000 a year on advisory fees. Yeah, I tried it, and I think they only charged me, like, at the time, $1,000 a year. But over time, the assets grow, and so the advisory fee will grow over time as well. And I would rather keep my money than pay someone else to try to beat the index and fail to do so. That's it for this video, and of course, thanks for watching.